All right, guys, back to work, Another great day. What a great day today. But it's back to work tonight, though. Only as good as our next trading day. So it's back to work. It's Tuesday evening, first day of November. Boy, this year is flying right by. Is it Christmas yet? Anyways, Tuesday evening, getting ready for a big Wednesday trading session. FOMC coming tomorrow afternoon. We got a bunch of ranges on the charts. We got some big news tomorrow, and there's plenty of great trades I'm tracking for tomorrow. As always, I'm going to go over all my favorite trades in tonight's video that will you have a game plan to make some money on the Fed on Wednesday. Before we jump in, though, and get a lot we're going to cover tonight, before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And I really appreciate you guys tuning in, especially after Halloween. If you guys enjoyed the video tonight, do me a favor, hit that like button for me. Appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, right? Let's get ready for Wednesday. Wednesday is a big day coming at us. We've got two FOMCs left, two Fed meetings left before 2023, and tomorrow we got one coming right at us. There must be a big news event tomorrow, right? Because everything is range bound right now. S&P's range bound, Nasdaq's range bound, oil, of course, is range bound. We talked about this last night. I mean, I love ranges. I wish every day was a range day because the strategy is so simple. Tonight we're talking about breakouts, right? Range breakouts. We're definitely talking about fake out breakouts, head fakes, and traps. There are easy ways to make money on the buy side and on the sell side. I'm going to cover all of it tonight on this video that we get a roadmap to make some money tomorrow. Now, speaking of tomorrow, though, let's cut to the chase, right? Tomorrow is a big day. We got really one of the most highly anticipated announcements for the rest of the year is tomorrow afternoon at 2 p.m. Eastern time. Now, I'm not going to go into a lot of detail tonight about what if the number comes out higher or lower, because all that stuff is basically noise. What they say tomorrow for us traders really is irrelevant, right? Bear with me on this. The most important thing tomorrow is get there early and get out of there early. As the day gets older, 11:30, 12 o'clock, 12:30, things start getting really thin. Volume dries up, volatility dies off as everybody kind of buckles up, right, for that FOMC announcement. And then what oftentimes happens is the reaction to that FOMC is just so violent and so volatile. Be very careful trading, 12 o'clock. You have to really have a good reason to be trading in the afternoon, especially ahead of that FOMC announcement. What I always tell my students is make your money early in the morning tomorrow. So don't be late to your desk tomorrow. Save your bullets. I'm not a big fan of trading in and around that FOMC announcement. Save your bullets, because oftentimes the day after FOMC is where all the pros come back. We call that Reaction Thursday. So promise me tomorrow afternoon you're not going to shoot yourself in the foot gambling on different ideas around the FOMC. Again, what the actual number comes out tomorrow is irrelevant to us. All we care about is how the market reacts to it, and then we're going to pick up the pieces and we'll make some money on Thursday. So early in, early out tomorrow. Only news you got to care about tomorrow is the FOMC announcement. We'll be in our trade room at 8 o'clock Eastern time. We'll have a front row seat for the early in, early out. Save the bullets in the afternoon. Don't go shooting yourself in the foot. And we'll come back on Thursday, Reaction Thursday. And oftentimes, that is where some of the easiest trades are going to be. So promise me you're not going to blow the account tomorrow afternoon trying to gamble on the FOMC. As I mentioned last night, earnings are pretty much behind us. There really aren't any major earnings reports we have to worry about. We pretty much now are out of the woods here on the earnings for the third quarter. We got one more batch coming early next year. Now, back to our charts. The money is on the charts, and I'm going to cover all my favorite trades on each one of these markets here tonight. So make sure you watch all the way to the end, because you'll learn new ideas, different tactics, different advanced strategies as we go deeper. And you know me, I try to save the best stuff all the way to the end, so I'll give you a reason to stick around all the way to the finish. Any questions? Drop those questions in the comment section below. Take some screenshots, take some notes, and let's jump right in. We'll go Emini and the SPY. We'll go Nasdaq and the QQQs, and we'll wrap things up here tonight on the oil futures. Now, heads up on this. These are all tick charts. Upper left-hand corner, they're all tick charts. You can see all the time frames in the upper left-hand corner. And also, don't forget the Emini and the Nasdaq, the SPY, and the QQQs, they're very much interchangeable. So what I talk about on the E-mini can be applied to the NASDAQ can be applied to the S&P. So be aware of that, right? Be aware of that, and I'll try not to overlap too much between the two. Now, there are 3 key insights right now that are tipping us off to where the best trades are likely going to be here for tomorrow. The first one is the overall 2-day situation. What do I mean by that? Well, let's take a minute here to zoom out and think about what's happened over the last 2.5 days. We had that strong run up on Friday, and as we always talk about, anytime we see a strong move in one direction, we expect a deep pullback and a retest of that high. As we talked about in last night's video, the buyers got trapped buying off that high, and we get this strong run lower. At this point now, we have to be aware of the potential for this turning into one big trading range, which means look where we are right now. This is a very critical spot for buyers and for sellers. It's easy to think now the buyers might be loading up on their long side positions, trying to make a run back up to retest the high. At the same time, we also know if those buyers, if they struggle, we're going to end up breaking through that low, and you know where that puts us, right? It puts us heading down all the way to that prior low all the way back last Thursday evening. This is a really critical area. We have to look at this as basically one big trading range. We go up, the buyers buy it, they retest, and now we go lower. The bears have a lot of momentum right now. There's no doubt about that. But as you can see here, though, this is a great spot if you're a long-term buyer, right? Someone trying to put a longer position on. This is a great spot for buyers to dig their heels in. So knowing that information right now, we have to be prepared for a jump up, and again, potentially all the way back up to retest these highs. And at that point, we're back at the high of that trading range. So kind of knowing that, right? Knowing that what I call the 2-day situation or the 2-day setup, we know that as the market tries to go higher, if the buyers, if they struggle here, there'll be bears coming back down to short this thing. If the buyers can run it all the way back to these highs, that's another great place for a short. There's a very small window here you can see. There's a very small window right here for long trades, and we got to pick our spots wisely. At the same time, as we go lower, there's a ton of room down there if the bears can get a breakout. Next up, second big clue here is that strong move lower, right? That strong move down that we saw, late morning, early afternoon. They haven't retested that low yet. Anytime we see a strong move, we expect that pullback, that retest, and then what? Then do we bounce from there and create a big range, or do we break out and go lower? And that, of course, takes us now to the third clue, which is the bearish trading range. Bear move down into a trading range. Ranges act like magnets. And so as the market tries to go higher, for example, and the buyers, again, trying to go back and retest that high, if those buyers struggle, we're going to end up right back into that trading range. At the same time, bears, of course, right, they want to get that breakout going lower. So a lot of clues here right now. I think the 2-day situation combined with that bear range right now is really the most important clue. Now, in order for us to plan the entry, we have to kind of think about these two scenarios. What's most likely, based on what we see right now, is we're likely to see this market try to go higher. Because again, those buyers are at a great spot to buy that low of that bigger trading range. What my question right now is do we go higher from here and ultimately create a rising support trend line and really give the buyers a better chance for a breakout going higher? Or do we take out that low and then come up off that low from there, which, as you can imagine, is a little bit easier for us to sell at that point because now we don't have that trend line to worry about. So in tonight's video here, we're going to talk about, right, if the market goes higher, how to buy it, how to sell it, and also, too, as we go lower, right, if we do get that kind of head fake and that fake out breakout, what do we do then? And obviously, too, if the breakout goes lower as well. So first things first here, let's assume right now, because, I have no idea what's coming next, right? All I know is what the odds of success are, what I know right now. Let's assume, for example, though, we don't get that move going lower, and let's say the market pops up and goes higher. This is it's a lot more bullish, as you can imagine, because now we have that rising support trend line. We still have a very strong bear move down, we still have bears in overall control. It's a range, and that range will act like a magnet. The only way I can sell this now with that rising support trend line is to use what I call a two-try trap. And that is, I want to see buyers come in. We're anticipating buyers trying to run this market back higher. So let them show us if they can do it. Let them try it once, come back, let them try twice, and I need a trap on this. The reason why I need that trap is because of that trend line. Right? So let those buyers dig themselves into a hole. Again, we know why they will be trying to go higher, right? Let them try once, let them try twice, grab that trap. That trap is a great setup because it gives you the chance to sell a little bit higher, of course, to avoid that rising support trend line. Take some profit off at that trend line, leave a runner to retest that low, and then I'm going to talk about how to buy it off that low here in a moment, so don't you worry. That's another great trade we're tracking for tomorrow. But now, let's say, for example here, let's say they don't fail, right? Let's say they go up here and they blast and run higher. Here are two scenarios I'm watching for because, again, there's a very small little window, right? Very small window of opportunity. Here are two ways I'll be looking to buy this if it does make a jump going higher. The first one is a 1-2-3 reversal or a 1-2-3 breakout. We take out that high, we pull back to that 21 moving average, and the buyers come in and they jump hard off that moving average. At that point, I can find a trend line off that high. I can mark a channel off of that low. I can look left, draw that prior swing, find that prior swing, and grab that trap. And now traps are going to be very, very important as we go higher. Why? Because I don't want to buy high. And traps, by definition, are the best tool to avoid buying too high. Again, we know why the buyers are trying to go up here. We simply wait for that 1-2 jump and then look for that first test trap, as we call it in our trade room, to go back up and retest that high. Here's another one. Let's say we do jump, and this time we really jump, right? It's a really, really strong run higher. As we always say, if we see those real strong pops, that shallow pullback, that higher high in price before we retest those highs up top, that's where traps can be used as well. So two ways to buy this as we're going higher here. Now, one thing I want to kind of bring to your attention on this, there may be a larger channel. If you draw a trend line off that low up around that high, there could easily be, and you'll see this even more on the NASDAQ, there could easily be a really big kind of hidden channel top up there. So as we go higher here, if we do end up getting that jump going higher, watch out for this pattern. Watch out now. Instead of a strong move and a higher high, watch out for buyers coming in and making that lower high. Okay, the minute we see that lower high is the minute now you know, okay, something's up, and this is where we can start picking off those reversals back down into that trading range. Okay, this is one of my favorite patterns called two-try trap or crown reversal. We talk about these a lot on these videos. So just be aware, if it does make that jump going higher, strong move, shallow pullback, higher high in price, yes, that is a valid trap. But if they get that strong move going higher and they start to struggle with one lower high, oh boy, that's not good for the buyers. Now we know bears will come in and they'll begin to attack on that trap high. Okay, a couple more scenarios here, then we'll talk about the move going lower here. Now, next one. Let's say we do end up all the way back at that high. Right? Let's say the market does rip and run higher here. It's a Fed day tomorrow. How we make some money on that? Remember, this is one big trading range. So it's not likely these buyers just keep on going, right? It's likely now, as the buyers come in, we start seeing one try. We start seeing two try. For example, that crown reversal. I know, same basic pattern, but it's so useful with ranges, especially with range breakouts. So if you do run all the way back to retest the high, that will be a very strong move. right? And so because the strength of that move is so significant, I want to kind of let the buyers dig their own grave, let them once, let them twice, right? Grab that trap, and we're trying to go back down into that trading range. Another scenario would be, right? We run up, we do pull back, they retest that high now, mission accomplished, and then we look for this scenario, right? One of my favorites is that two-try failure, 1, 2, think about now, strong move up, buyers buy the pullback, they take their profit at the high, right? Smart money's getting out, dumb money's getting in, right? The inexperienced traders are getting in. Think about now where the stops are, right? Think about where their pain is now, right? That's where you want to sell into it. Again, potential for a big range up here. Once we trap in those buyers, I can sell right into those stops. And then don't forget, as the market rolls over here now, where are we trying to go? We're trying to go back down into that trading range, and I can now look for that new channel off the low, market off the high, and I'm looking for any of the entry patterns that you guys learn in our free trading course, right? Could be a bull trap, could be trap entry, it could be a failure entry, like a two-try failure, it could be a pullback combination. Again, all the same stuff you guys are learning in our free trading course, which reminds me, I know that most of you guys have taken the free course already. You've learned things like the two-try traps. You've learned the failures, the pullback combinations. But hey, if you're here for the first time today, if you haven't learned all these entry tactics I'm talking about, I want to make sure you guys get access to that stuff. What I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link. Take the free trading course, because in that free course, the strategy that I teach in that free class will help you find so many more. You'll be amazed how much easier it is to know where the winning trades will be. It'll make it easy to know where the losses are more likely to happen. And most importantly, it'll give you an easy roadmap to follow each day, which for me, by having a roadmap to follow, it gives me a lot more confidence. If you're missing the best trades each day right now, you're going to want to grab that link, take the free course, learn the strategy. It is perfect for someone who's trying to make the jump into full-time trading. That way, the next time I say strong move, retest, and now trap in those buyers and then sell into stops, you'll know what that failure pattern looks like. You'll know how to find that new hidden channel, and you'll know exactly what to look for when I say don't miss that first test, right? So that's an idea, or that's the strategy I'll be using as we go higher. Now, as we go lower here, right? If we go lower, the next big question is if we go lower here and then back up, that is a very viable scenario, and we get to be ready for that. The next scenario, of course, is if they keep going lower and they break out and run lower, because again, there's a ton of open space down below us. So S&P looks pretty good. Again, you got my game plan going higher here. Let's talk about now the game plan going lower on the Nasdaq. The Nasdaq is very similar again to the S&P and the SPY. There are three key insights right now, very, very similar, with a little twist there with this spike in channel. The first one is the 2-day situation. Now, on the 2-day analysis, or 2-day setup as we call it in our trade room, you can see what's going on, right? We had that strong run up. They were unsuccessful at retesting that high, and of course now back down into what really is a spike and channel. Again, just like on the S&P, you have to think this is an area where a lot of the longer term buyers would love to buy this thing and bounce it back up. As we just discussed, though, it would be great for us to get some buyer failures to sell back down, buyer failures to sell back down. And again, if the buyers can get enough punch to this, there definitely is a window of opportunity where we can look for some long trades. But again, we have to pick our spots wisely as the market goes higher. And again, just like on the S&P, if they can't hold these lows right now, where do they want to go? They're going to want to go all the way back. It seems crazy, but all the way back to that last Thursday's low, right? That's the next big objective down around, 10,950, 10,921 down there. So it's a very critical area here right now for the buyers, certainly. And the bears have a lot of great opportunities here. Same thing also, too. There's a bear range on this. Bear market into a trading range. What does that tell us? A bear market into a range always tells us we're looking for shorts at resistance above the range. We talked about some of those ideas here earlier on the S&P. Also, too, looking for breakouts, right, going lower. All right, and we'll talk about those breakouts here right now. So bear range is important. And then last but not least is that spike in channel, that spike down into that channel. Why is that important? Well, spike and channels are kind of notorious for pulling back into the base of that channel. So like right where the channel and the spike come together, the base of that channel, that is oftentimes a very, very common area where we're going to pull back. And again, because of the bigger range we're seeing here right now, again, I like the idea of that 1, that 2, trapping those buyers and short that thing right back down. Or again, like I mentioned before, there could be a larger channel out here, right? Draw off that low, up around that high. This low over here could be drawn. So again, you've got to be careful as this thing goes higher. I definitely like the sell side better on the NASDAQ as it goes higher because you can see that trend line coming down overhead. So just beware, be careful, pick your spots wisely. If the market runs higher, it'll be likely easier money if we go higher, trapping those buyers, right, and back down into that trading range. But let's talk about the breakout, right? Let's talk about breakouts going lower here. There are a number of different ways in which we can make money on breakouts. My favorite breakout pattern is a failed breakout. Right? So remember, ranges are magnets. And so as the market tries to go lower, there's a very good chance here we might kick right back up and run back up into that trading range. So I do want to make sure that we all have a game plan to do that. Let me get rid of this channel here for just a moment. Keep it simple here on this. And again, this will also apply to the S&P if the S&P can make that lower low. First of all, how do we buy in a bear market below a trading range? Well, first of all, we want to be at some support level, right? I want to have some trend line. I want to be at some support level. You always want to incorporate some support to be a buyer below a range or some resistance, right, to be a seller up above the range, right? You always want to incorporate some additional level. Once you're at that level, now we look for what was basically signs of exhaustion. And to get that, we're going to use that classic 2-try failure. 1 try for the bears, 2 try for the bears. Now, in this situation, because we are so bearish overall, you really want that trap. You really want that trap to be buying before we get a retest of that low. So one way to buy the failed breakout is to let those bears try twice, grab that little trap below that low. Another trick I like to use is to find a trend line off the high, bring it down off that low, and buy off of that trend line. So sometimes you'll see that little hidden channel will form there at the low of that trading range. Another way to do it would be, let's say they do go lower, let's say they do pull back and they retest that low, mission accomplished. Now I can get a lot more aggressive, right? Now I can go, okay, 1, 2, and I can use those stops, right, as fuel. Bears are trying to sell. The easiest money you're ever going to make in a range market is trapping in some breakout bears and then simply using their stops as some fuel to run higher, right? Easy trade to take. Just take some patience. We're not going to pick that bottom. We're going to let the bears come in and dig their own grave and use their stops as fuel. Now, where are targets on these failed breakouts? Well, first of all, the other side of that trading range is pretty much always going to be a good target for you. It's almost probably 90% of the trades I take in the trade room. The other side of that range is going to be the big target. Then the runner, the amount we go below the range and above the range, that's where the market now wants to go. Now, once we get ourselves back up into that area now the question is, do the buyers have enough juice to hold this, right? Can they hold this for a breakout? Which, again, because of that 2-day scenario, could easily be the case. Or do we see more bears coming in? Because after all, it is a bear market right now, short term, of course, and we get a range below us. Do the bears come in and run these buyers ragged and run it back down again? That is the key scenario we're watching for right now. As we go lower, trapping the bears for that failed breakout, get that jump running back higher. As we go back to the other side of that trading range, we start running into additional levels of resistance up overhead. We now trap in the buyers the same way we do at the low, right? We now trap in those buyers. And again, as always, we think about where those stops are and use their stops as fuel, right? That's the simplest way to look at it. Now, again, be aware, because if they hold that pullback, right? If they hold that pullback and they jump, now we have to deal with that breakout and that reversal going higher. And where do we think that reversal wants to go? Yes, it's going to want to go right back up and take out today's high, basically, right, along with yesterday's high as well. So imagine now we run lower, we get that, that reversal, that failed breakout reversal. We then pull back, and now the buyers pull back and they jump off that moving average. Okay, the key is I'm not going to buy that pullback, but I'll gladly buy the next pullback. So what I'm going to do is grab that new trend line off that high, find that channel at the low, drill down, right? Find that prior swing. I always like to get underneath prior swings on these because that's where traps live. At the very least, I want to get below this 21 moving average, because if I can get bears coming in and selling short off the EMA, then I can use their stops as fuel. That's a failure pattern. And then, of course, into your pullback combination. Now, remember, whenever we see a range breakout or a reversal, the first leg is oftentimes equal to that third leg. Okay, so we know kind of where it wants to go, but the size of that pop going higher, again, not the second leg, but the first leg, that's the measuring leg. So if it does jam higher and they take it higher with that 1, 2, 3 jump off the moving average, take that first leg up, kind of anchor it down at that first pullback, and that will give you an idea here now of kind of where that target is. And again, it's most likely going to be that prior high up there at that 11,626. Another variation of this is that pop and grind. In fact, these are pretty common. Again, let's say we go lower and we get that failed breakout going lower and the market pops, but instead of pulling back to the moving average and jumping, what it does is it begins to grind. And what that grind tells you is it tells you all the bears who really should be there waiting to sell short, they've now left the building. Right? They've walked away. That grind is a very easy giveaway because now I can mark off the highs. I can find that channel off the low. I know that seems a bit strange, but trust me on this. Mark up those lows, right? Mark up those prior swings. Get underneath those prior swings. That's where traps live. Get underneath that moving average. That's where failures are. And of course, those pullback combinations. Again, first leg, third leg, right? That will give you a really good idea of where that objective is. All right, guys? And if for some reason, don't forget, last thing here, right? Last thing here on the fake up breakout, if this thing rips and runs right back higher again, but the buyers can't do anything with it, right? If we come back and the buyers are going, one, right? Remember, lower low, what's the game plan, right? Lower low, game plan is traps and back down. So it's really important those buyers have to get that push through these key areas of resistance. They should be able to do it, right? In all reality, that's what should happen. They should be able to push through it. But who knows, right? Who knows what's going to happen by the time we get there tomorrow? It could be a completely different ballgame, right? So as we go higher, make those buyers prove it to us. If they can't pop and grind, if they can't hold and jump, right? We're looking for those 2-try failures, 2-try traps to go right back down into that trading range. All right. So be aware of that possible head fake, that fake out breakout going lower. Now, last but not least here, and again, this will also apply to the S&P. What would a breakout look like? Well, first of all, there is plenty of open space down here. There's no doubt about that. It is like a football field down here, right? Full of space here. So there's a lot of breakouts we can use on this. The most common breakout is that 1, 2, 3 breakout, right? They take out the low, they pull back, they jump off the moving average. Again, we're not selling that first pullback because of the range scenario I mentioned earlier. But if they can hold it, right? If they can really jump off that moving average, go lower, now we get a strong move down. Now we can find that new low, that trend line, find that channel high. And again, I'll try not to repeat myself too bad on this one, right? But that one, of course, right, that's where you want the entry. And again, this could be any of the traps, failures, pullback combos, first leg, third leg. That'll give you an idea of where that target is. Or maybe it simply pops and begins to grind down. These are even easier. Mark that low, mark off that big high, find those prior swings, and don't miss that first test off the high. And again, I like traps. We might not get a trap. It could be a buyer failure above the moving average. You'll learn that stuff in the free trading course. First leg, third leg is going to be our objective. And then one more thing you want to kind of think about is anytime we see a really big breakout, right? It's probably not going to happen because we have the Fed tomorrow, 2 o'clock Eastern time tomorrow afternoon. But let's say, for example, the market really rips and runs lower, right? Something happens overnight, everything gets spooked. Again, this could also apply to the S&P as well. If we see a really big move down overnight, the first thing we want to think of is don't chase it. It will likely be seen as being too low to sell. What I'm going to do is wait for a deep pullback, right? Wait for a deep pullback. Now, how deep is deep enough? Well, typically what I'll do is I'll find a new channel, right? So if we get that real strong run lower, right? Some big gap down overnight, right? Something crazy happens and the market freaks out. What I'll do is I'll start looking for where can I find a bigger channel that will put me a good distance above the moving average. What I want to do is I want to wait for that deep pullback. How deep? Deep enough to definitely get above the moving average, but more importantly, deep enough to begin to fool some of the rookies in the market to thinking this is a reversal. See, what happens a lot of times is whenever you see a really big move down like this, a lot of times, like when I was a new trader, I would chase it going lower and I would get in way too late, way too early. Right? I'd be selling way too low. So think about it. If we have a lot of inexperienced traders who are selling really low, when the market begins to go higher, they all get stopped out. And when the rookies get stopped out, what happens is the market begins to pop. It has this kind of almost feels like a reversal, right? It begins to pop and go higher because of the short squeeze, right? All the bears are getting stopped out. When you start to see that pop above the moving average, it's not usually a reversal. Usually what it is it's just the rookies getting stopped out early. Now, as those rookies now flip their position and they begin to start thinking about the buy side now, you got them. Because anytime you see that strong move down, big move down, we're waiting for that really deep pullback. Again, get those rookies stopped out. Let it begin to pop higher. And again, this comes from experience. I made this mistake a lot when I was a new trader. The inexperienced traders, the rookies will come in. They'll think now this thing is reversed, and they'll start to buy that first pullback. Once they do, think about where their stops are, right? Their stops are right there. If you're long in a big, strong move down, you're probably not going to give this much wiggle room. If we see a nice, strong signal candle going lower, all those buyers get stopped out, and the market will just shoot right back down and retest the low. One of the easiest ways to make money, but you got to have the right mindset for it, right? Remember, it's a big move down, so we don't chase it. We wait for that deep pullback. How deep? Again, usually once we get up around that bigger channel, right? That's usually a pretty good idea there. And then the real giveaway is once it begins to accelerate. Once that little voice in your head says, oh my goodness, maybe this is a reversal, usually that's when it's time to trap in those buyers and take it lower. Now, sometimes what happens is sometimes the buyers come in and they do hold it. Right? Sometimes they do hold it. It's not very common. Tomorrow's a Fed day, though. It could easily happen. If they do hold it, what do? If they jump going higher now, what do? Well, this is easy now. Let me go out, mark the new high, find that new channel. We don't chase it higher. We wait for that next pullback, and we go big on our best setups off the low of that new channel. Again, that's not going to be the most common situation, right? But if it happens, you're ready for it. Okay, if we do see a strong move down and by some, by some small miracle, right, the buyers come in and they do get that reversal, good for them. Don't chase it higher. Just simply go out, find that new channel, and we'll structure that new channel tomorrow, obviously, and look for that first test off that low, first leg, third leg going higher. Right? That makes sense, right? Trapping those buyers. If the buyers are successful, good for them. Don't chase it. Wait for that pullback and don't miss that first test, right? That's the best one to look for as well. All right. Oftentimes what happens is when you see a relatively big breakout going lower, we find those bigger channels. We go up, we trap in those buyers, get that run back down to retest where? To retest the low. Once the bears take their profit at the low, then we can go in and grab that double bottom reversal, trap the bears in once, twice, and literally buy right in their stops, right? Think about that scenario. We trap in the buyers, trying to call that V bottom. We then trap in the bears at that low. And where does that target go? It goes right back up to retest the high because, as I always say, watch out for that big trading range, right? Same idea we talked about at the beginning of this video. All right, guys? Hopefully that gives you some light bulbs going off. Hopefully that makes some sense to you. If it doesn't, let me know in the comment section below. But I think now we've kind of fleshed out most of the likely scenarios, the potential setups here for tomorrow. Again, be very careful with this thing slingshotting higher here right now. It could easily punch and go higher, and we're watching for that, the buy side on that here tomorrow morning. Last but not least here, over on the crude oil. Oil, of course, 3 key insights right now here on oil. This is a 1500 tick chart on the oil futures. We made it through all the big energy earnings that we talked about in last night's video. First of all is the 2-day situation. Let's talk about this for a second. Zoom out for a moment here. And you're going to see right away here, you'll see right away what's happening right now here on the oil. We had, and this is definitely more than a 2-day situation. Going back a few days though, we had that really strong move up, right? October 27th, right? End of the, basically the middle of the week, last week. They still have not retested that high yet. Now we get that really deep pullback, and you know the buyers want one thing. They want to go back and take out that 89, 79, right, 79 level. That's where they want to go. From there, can they break out through that area? Right? If they can, they'll want to go take out that 92.5, 92.63. That's the next level overhead. But if they can't, right? If they can't get this thing to go through the high, what's going to happen? It's going to want to flesh out, right? Fill in all this area, right? It'll begin to rotate back down again. And we have that same basic idea. It's basically one big trading range. So if you understand the overall kind of situation we're in, the overall kind of climate that we're in right now, we zoom in now, you can see this is go time right now for the buyers, right? The buyers have a big burden on their back right now, because if they can't get this thing going higher, well, let's talk about this, right? Next clue is a strong move higher today, right? Strong move up here today. They're going to want to retest that high. It basically goes right along with what we talked about on the 2-day situation, or the week ago situation, right? As I mentioned before. And the next one is that bull range, right? Bullish into a trading range. Why is it important? Well, because as we rotate off the low of that trading range, the buyers are going to want to punch it higher. Can they break out? Do the buyers get that breakout up to that 92.5 level? Or do we get that reversal back down into that trading range? The reason why I say the buyers really have to do something right now is because if they go anywhere but higher, right? If we, for example, right, we know what's most likely right now is to get that rotation going higher here. That's most likely. But imagine though, if they go lower here overnight. Now that tells me this now is a failed rotation for the buyers. It's a huge bearish clue. And now you can start to think now we've got channels coming down overhead, and you got some great potential shorts off the top of that channel, right? That's why I say the buyers, they really have to do something with this, or else we're probably going to end up right back down around that 85.5, because again, that's the lowest point of kind of this big range that we're fleshing out right now on the oil. And I know that's a bit complicated, so I apologize, but I think you can handle it, right? Give me a few weeks in this video, and you'll start to pick up on the stuff pretty easy here as well. So the overall idea is as we go higher, do we get the buyers roped in here, right? For a 1-2 failure back down, right? That's the way you sell it as we go back to those highs, right? Do the buyers break out? Do we get that breakout going higher? Do we end up taking out that high? Do these buyers come in, hold that pullback, and blast and run higher? Good for them. Mark that high, mark that low, find that channel, grab that first test, right? We've talked about this many times already tonight on this video. Or does it Does it pop and grind and go higher? Even easier. Pop and grind channels, my favorite dance move. Always one of my favorites off the low of that channel. And again, I'm simplifying things right now because we're getting pretty late into this video. We've talked about most of the stuff already here on the lesson tonight. And again, you'll learn all the entry setups I use for these inside that free trading course, right? So as we go higher here, right? As we go higher, we pop up, 2 tries for a failure back down, right? Or they hold that breakout and we blast and go up to that 92.5 level. The big question I have right now is if we go lower, right? If we go lower right now all of a sudden that creates a falling trend line. It makes a new channel here. That's where things, in my eyes, get more exciting. Let's say, for example, first of all, we go up, take out that high, and we end up spitting all the way out on the other side of that trading range. Ranges love to rotate. We go up, we take out that high, the buyers get trapped, and we sell off of that high. Think about now, as the market rolls lower, think about now where it wants to go. It's going to want to take out the other side of that trading range. As we go lower here, we can definitely look for now bears once, bears twice, and buy it back up into that trading range. However, if they keep it going, right? If they keep it going lower, that's where breakouts come into handy. And of course now, if we do end up rolling over, we start watching now for that new channel off that low. We mark off that channel high. We try to get up around those highs. And basically what we're doing now is we're trapping in the bears or the buyers, right? We look for those buyers to come in, let them try to buy that pullback, use those stops as fuel with a failure, grab that pullback off the 21 EMA for that pullback combination, and we know where roughly the market wants to go. So as we go higher here, watch that failed breakout. Watch that failed breakout as we go higher. If we go up and back down again, we still find ourselves inside that same trading range, and we're still 1, 2, and back up again. However, if they don't do something now, if they try to go higher and end up rolling lower like this, we start looking for a larger channel or a new bear channel. We try to get up around those highs, trapping those buyers, and back down to take out those lows. If we do end up down at those lows, remember that double bottom reversal I talked about earlier. We may also see something like this where it may break down. They may hold that pullback and jump off that moving average. If that's the case, again, bullseye is right at that 85.30, mark off that low, mark off that high, find that new channel, and we're going in for that short off the high there, right? Once they do take out that low, then do we get that crown reversal, right? That 1, that 2, that trap, and go, right? Or do we run lower, retest the low, mission accomplished, and then 1, 2, back up into that, basically back up into that big trading range we have above. So plenty of ways to make money on this tomorrow. You can definitely see. The key is going to be how the buyers react, right? Do we see any buyers up here, and can they get that breakout? If they can't, it seems quite inevitable the bears will take this on the attack and make that run back to that 85.5 level waiting down below. So tomorrow we'll see, right? The game plan is all ready though. As always, we plan our trades the night before, that we know the game plan for tomorrow. And tomorrow we're going to come out and we'll trade this plan together. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, don't be late tomorrow to our trade room because we have that big FOMC announcement, 2 o'clock tomorrow afternoon. It's early in, it's early out. Don't forget, if you're looking for a place to come out and learn and trade along, there's no better place to kind of kickstart a professional trading career than with me every morning in my trade room. I've covered the basics here this afternoon on this video newsletter. Tomorrow, we kick it up a couple more notches and we'll trade this stuff together. I'll put all the membership links, all the free course links. I'll put everything you need in the description of the YouTube video. If you have any questions or any trouble getting access to our free classes, call call the office, shoot me an email. We have live chat as well. We're always here to help out along the way. All right, guys, have a fantastic rest of your day out there. Enjoy the game tonight. Rest up. I'm sure most of us are still hungover from Halloween last night. Enjoy your evening. Get some rest. I'll see you tomorrow morning, 8 o'clock Eastern time for FOMC. If not, we'll come back. We'll do it again tomorrow night. Same time, same place. As always, my name is Joseph. Be well, be nice to each other, and be here tomorrow. Adios, amigos. Bye-bye for now.